Hi traders, and welcome to this week's edition of the Keyzone Traders Trade of the Week. Now this week we're going to look at a trade that I took yesterday. It was a day trading strategy and it covers the same principles that we cover pretty much every single week in these videos, but this time it was a losing trade, and I want to show you why it was a losing trade. In the back of my mind I sort of knew as well that there was the potential for it to do exactly what it did, but it was still part of my plan, so I had to take the trade. So with all of that, I think there's a few lessons to be learned. Let's go take a look at the charts. Hi traders, okay, so we're using the replay function again in TradingView. As I keep mentioning, I think it's a really good tool because it allows me to show you what I see in real time and then explain my thinking as we progress through the trade as well. So I really think that helps cement learning rather than a lot of people who just show you the textbook setup after it's all happened and it all looks picture perfect. So this is what I was looking at yesterday morning. I had these two zones. There were other zones, but these were the two that were relevant to the price action of the trade that I'm looking at. We had this support area, which, as you could see, had held here on the retrace, and then it had held a support here and here and here. So that was the area that if it broke through, I was potentially looking for a move back down. But I just when this is a little tip for you guys. When you see the Bollinger Bands tightening up like they are here, generally speaking, not always, but quite often, you can see a false break. You certainly should be more aware that false break patterns are potentially going to happen. And obviously, if they're going to happen, would rather take them with trend than against a trend. So straight away, first thing yesterday morning, I've identified that the Bollinger Bands are tightening due to this tightening of the consolidation period. And I'm overall market, I'm bullish, and I have a strong support area here. So straight away I'm looking and thinking that there's potential for a false break pattern here. So that's just a little tip for you to think when these Bollinger Bands are tightening. Often the first move is that liquidity grab. It's the one that suckers a lot of traders in and then reverses. So let's go and have a look and see what happened in the price action. Okay, so this was just before the market opened, and I just want to show you a couple of levels that I look at. Now, I look at the overnight low, so that's the lowest price, or the lowest and the highest price, traded between 12:15 and the cash open. So for the DAX yesterday, that was here at 15,690. That was the overnight low. And just to show you where the overnight high was, although it was irrelevant to this trade, that was up here. That's the highest price traded in the Asian session during the futures session of the futures market before the cash open. So from 12:15 until 8 o'clock, I take the highest price traded and the lowest price traded, and I look at those because that's the overnight range. Now, that is quite often where I see my false breaks. So I'm going to show you what I saw and then why I took that. So that is part of my plan, especially when I see those tightening of the Bollinger Bands on the hour with trend. If I see a false break pattern of the overnight range, then that's part of my trade plan. So the market opened and we got a really big move down. Another candle. We did actually trigger up, but that one failed. But this one wasn't part of my plan because it hasn't taken out the overnight low, so it hasn't done that liquidity grab. So that's not part of my plan. I didn't take that trade. We then carry on, and then we got this here. We got the close below, and then we got the close above. So this here is part of my plan. We got the liquidity grab below the overnight low. We're in a zone of support. The close below, the close above. That is part of my plan. It's a false break pattern for me, and that is what I took. So I entered here on a break up of this bar, and I had my stop below the lows here, and I was just targeting back to the mid of the Bollinger Bands. However, we got triggered into the trade on the next candle, as you can see, and it still looks okay at the moment. And then we got that candle there, which took us out. So this one didn't really offer me any chance to manage the trade, risk manage the trade. It didn't offer me any chance to close out for a smaller loss. it was just a losing trade, and I had to accept the full loss. But you can see that that pattern there is exactly the same sort of pattern that I discuss pretty much every single week. And if you watch my daily recap shows on my YouTube channel and on my Twitter channel, you'll see I talk about these pretty much every single day. You can see them all the time. So I had to take it. Sometimes they just lose, unfortunately. Now, I was aware that the previous day's low, so the previous day's session low, was a little bit further down. That was, if I show you, believe it was here. That was the low. This was, bear with me 1 second, let me just confirm the low. Okay, apologies. So the actual cash traded low the previous session was 15,683.7. So if we put that in, that was the actual previous day's low. So I was aware that to exercise the liquidity grab, that level may have to want to take out, because a lot of traders may have had their stops below yesterday's low rather than the range of the overnight action. So I was aware that that was a potential possibility for the trade. However, as I said, part of my plan was to take false break ranges of false break of the overnight range in support with trend. So that therefore made that a valid trade. Now, when that trade failed, I monitored a 3-minute chart as well, and I saw this pattern as well. Now, I almost took this trade because about 5 seconds before this candle closed, the candle was closing up here on its highs. Now, if this candle had finished on its highs, we've got another false break pattern. It's a strong close below, and then another strong close back above the two levels that I would have identified that the market may potentially want to take out to grab that liquidity. Because it closed below and it's got this tail, it wasn't a strong close. Therefore, for me, it's not a false break pattern. Therefore, I could not trade it. As I say, if it had 5 seconds before this candle closed, I had my order ready to place because the market was trading right up on the highs here. And if it had closed above this 691 area, I would have taken that trade. So even when you take a losing trade, you do have to be prepared to go in again on another signal if your trade idea is still supported and you see that signal. That is also why sensible leveraging and sensible risk management is key, because you don't want to over leverage and end up losing vast amounts on the same trade idea. This is why I only risk like 0.5% to 1% on these trades, so that if I have to take them again, I'm still not doing too much damage if they both end up losing, because there's always the possibility that both trades lose. You have to expect the worst case scenario. However, as I say, going back to the setup, this didn't set up how I wanted, so I could not take the trade, but it ended up going on and working. So, unfortunately, it didn't set up. That's why it's important to show the discipline as part of your trade plan as well, even though sometimes those trades go to work. So the one that set up as per my plan was a loser. The one that didn't set up as per my plan, even though the idea was the same and I was looking for that, it went on to win. Unfortunately, that's just the way it goes in trading sometimes. But I can assure you, by sticking to your plan and sticking to the rules of your plan, in the long term, those edges and those possibilities and those probabilities play out into profitability. So guys, I hope you found this useful. Like I say, a couple of good lessons to learn from that, I feel. Let me know what you think in the box below, and as I say, please come follow me on Twitter. The link is in the box below. I give out my free pre-market analysis every day. I do post-market recaps to show where you could take advantage of the price action in the markets around my zones. So please come follow me on Twitter, comment in the box, let me know what you think, and I'll speak to you again soon. Cheers guys.